Hello everyone, today we will look at stochastic indicator. This was created by George Lane in the 1950s and it will be used to show us when an asset may be running too hot, overbought, or too cold, oversold. So basically it's an oscillator. It will go up and down on the chart. We will have a look at it immediately. It gives us readings about 80 and under 20, so it will go from 0 to 100. And it has two lines, the K and the D line. We will talk about them. And we have a formula here. We have the close minus the lowest low divided by the high minus the lowest low times 100. So I will show you how this looks. We'll go to trading view. We will add the indicator here, stochastic. We will add a general one. We will look at the strategy as well. So this is how it looks. It comes as standard with 14 periods, and the blue line, the K line, is 1, and the orange line here, the D line, is basically 3 averages of the blue one. And I will show you how this is calculated. I already did a video on Williams percentage R, and I will show you here something very interesting. Williams percentage R. Now, if you look at these two, you will notice that the blue line is exactly the same as the Williams R. So just for a quick example, we take out the D line. Now look at it. Perfectly exactly the same. Only difference is this one goes from 0 to 100. This one goes from minus 100 to 0. But it's just a reference, so we don't really care about that much here. It doesn't really matter. We just want to trade outside of these areas. So for Williams and for stochastic, you just have to go inside the blue part here, and you can go long, and when you come out, you exit the trade or you go short. Let's add this line as well. It doesn't help us that much. It's just a smoothed average of the other. There are some trading strategies where when this line crosses this one, you go long and exit, but as you can see, it gives you a lot of false signals, so I'm not sure if it's helping in any way. So let's see what it actually measures. Basically, the formula says we use the period, so 14 candles. We will look at 14 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So basically this one here, this one, and then we take the high of these 14 candles, and then we take the low of these 14 candles, and it tells us where the price is. So we can see it's more or less in the middle. So we have a reading of, I'm looking at the blue line, 50, so it's exactly in the middle. So basically what it measures for the last 14 candles more or less where the price is. Remember, this is calculated just for this candle, so it doesn't apply for the other candles. The other candles are calculated from the candle 14 candles behind, so taking the other candles as well. So for example, this one has the low somewhere over here. So this is why you get a different, let's take Williams R out, we saw it. This is why you have a different representation here, and it goes for each one. We can easily see how it goes by adding a price channel to the chart. Price, I'm adding the first one, it doesn't matter which one. So if I take my lines out, and we need to change the period here just to be, so we have 20 candles here and we have 14 for the stochastic. We need to change these to 14 candles. Inputs, 14 candles. So this is an indicator that shows you the price channel. It basically tells you the high for the last 14 candles and the low for the last 14 candles. What stochastic and Williams R do more is give you this percentage from the high and from the low. So if you use just the price channel, you will see the high and the low. This one also tells you the percentage and it gives you this representation. Remember, this is not bound, so 100 or 0, it will not mean that here we stop. The price can go up, and if it goes up, let's see, here it went up, so we compare these two candles. This one here is already quite high, so it's here, 96, and then the next candle went above the 0 line, the 100 line, and it's actually very close to 100 because it closed very close to its high. So the percentage is close to 100. But again, you can still have candles, green candles, green candles, green candles. So this can actually stay at 100 if there are more green candles. So it's not limited. If you reach this area, it doesn't mean that the price will not go up. So we have a percentage. It gives us a percentage. We can see here relatively if it's in the upper part or the lower part. They call it overbought and oversold, but it's just the upper part. It doesn't really matter if it's overbought because the price can still go up, so it's not set here. Okay, how can we trade this? Just like Williams, we can trade it when it goes down, and as soon as it closes above the 20 line here, we can go long, try to exit somewhere around here in this top area, or wait until it goes back. If you wait until it goes back, you might lose some money here. But again, if you exit just when it reaches the top, you can exit here or here, depending on the case. You need to find one part that helps you more. So you need to see how your trading style is and see which one helps you more or less. You can add a moving average, add it here, SMA, simple moving average 200. This will give you also a trend, so you can see it if it's up, you try to go long. If you have an area where it's down, you're in a downtrend, you might try to go short, so try to go to sell here, and try to go short. Like all indicators, this will give you a lot of false signals as well. But if you find, this is the S&P 500, SPY. So if you find a stock that is usually going up, just try to go long, and then if you purchase in the lower areas and hold the price for some time, it will go up, so you'll make some money. This is a good indicator for swing trading. It can be used for daily trading as well. Let's go and try and trade a little bit. TradingView has this replay button. On the daily, you can use the free version of TradingView and it should work okay. If you want to go on the mini chart, you have to buy the first package, Essential. It's $15 a month or something like that. No, we want to be in it. So we are trading the daily. Let's go a little bit far behind, a few months. So I will aim to trade, let's see, we'll start here. I will wait for this to come back here, and as soon as it's closing, the blue line will close above the 20, we will go long. 500, you know, let's say 10 shares at 568, so it's a little bit shy of $6,000. And let's go one by one. So I'm waiting for it to go down. I'm not even looking at the price, I'm just looking here. And I'm waiting for the price to come down here, and then as soon as it comes up, we will go long. So I'm not looking at the price, we're just looking at the indicator. Now it went under, okay? So we are waiting for it maybe to play a little bit here. As soon as it goes above, we will go long. So it stopped here, it's at 48. As I said, this is using the close of the candle, which is good with this replay because it gives us the full candle. So I have the close here. So I can buy at the close or I can buy at the next open. But because we are using this replay action, I will buy here and it will, let's see where it puts the price. It puts my price just at the close of the candle. Now, you can look at the end of the trading day and I don't know, 5 minutes before, you can try and pinpoint the close. So it's not difficult to do, especially on the candles. You can just look at the end of the market day and pinpoint it. So now we had a jump here. We had quite a high jump and the price is going on the top side. We can sell or you can wait a little bit. Let's just go and wait until it goes a little bit under the other line. So we can go short, but here we have a clear uptrend. I wouldn't go short, or we can close the position. For me, for example here, anywhere in this period I would close the position. I don't have to wait until it comes under, but you can play and see which one brings you the most money, which one keeps you in the trade longer. So here, for example, if I exited in the first part, I would have lost, I don't know, 1 or 2 candles higher. But then if I waited until it closed underneath, which is this red candle, I would have closed here. So closing on one of these green candles on top, for me, is better than closing on the bottom of a red candle. So let's go. I will wait here until it goes under. So we will see. And now it went under. So we sell. We lost a little bit of momentum here, but we made some money. Okay, let's wait. I will go long because the trend is high. I will try to go only long. Also, some of the brokers, some of the trading applications might not have shares. So when you try to short, it might tell you shares are not available and might be frustrating. But if you just go long, that should help, should not be an issue. Especially in a stock like this that goes only high most of the time. It's safer as well. So we are waiting for it to come down. We don't do anything while it's up here. I want to see it down here to take my next decision. I will just, and here we go. So we went down and we closed above. We are at 36. I buy here. Let's see what happens. So my stop loss when I do this is at the previous low. So because this came here and went up, my stop loss is somewhere under this candle. The same here, I bought here on top, my stop loss is somewhere here. So you can see that you have a, let's see if it works like this. You have a short stop loss. We don't use a specific, you can use a specific risk to reward ratio, but normally you should aim for the top of the indicator. So not necessarily a 1-to-1 or 1-to-5, or you can use 1-to-1, 1-to-5, or you can scale out. So if you have 10 shares, you can take out 2, 3, 5 shares and leave some of the money to move further. But as you can see, this one gave, I don't know, 2.3, 2. The risk reward was 2. Actually, we exited down here, so it was only 1-to-1. Again, in the second trade, we will see if it goes up or not. We can take some money here. We don't really have to wait for it. When I see 1 or 2 candles, you can already take some money and put it in the pocket just in case it doesn't go all the way up. In this case, it looks like it didn't. Let's see if it goes up. So we have a close to our stop loss. If I have a close below, I will exit the trade. We are up again, but we are not close to the top. And here we have a close that is below our stop loss. So now I'm selling. We lost some money, it's not an issue, we'll go further. Here we went down and then this one closed at 22.26. So we are theoretically in our trading range. Let's buy again. The stop will be down here. Let's see what happens. Now it goes up and we are in the top side. So again, for me, I would sell at some green candles, this one or the next one. If there is a next green candle, I can sell some shares. Here I would sell for sure, but it still goes. So if you did not sell all the position or you didn't sell anything, you can still wait. So these are the cases where it goes and it might go for a longer time. So the sell is when we go below this line, the 80 line. Now it went below and then the close is high, but here we are still under the 80, so we are at 67.8. So this is a sell. So here we made some money as well. Overall, we are in profit with 3 trades. We have 1 losing trade and 2 winning trades. Let's go further and see what happens. We are closing today, so we might not have another day. Another trade, let's see. No. So we had 3 trades. Let's do another one. Let's do AMD. I'll go back to October. And we we are here, we are on top. I have a downtrend here. So normally here I would short. This would be a short, but for the purpose of this video, let's go only long. Even though this is a downtrend, let's see how this works, because it might not work as well as it did on the SPY. So we are waiting for it to go down. Now we are underneath. We are waiting for it to come up. What do we have here? Let's do 40 shares. This will be 5,000–6,000 euros. Should be okay. So we have a close above. Now we have 24. Let's buy. We don't need to look at the price. We can look down here. I think this is a trend line that I had seen some time. Take it out. Now the moving average is above, is going up, but the price is going underneath it, so this will flatten, will probably go down a little bit. This is a period where you don't know if it's a trending up or down. Looking at the price, it's making lower lows, so it's actually trending down, but we are trying the strategy anyway. So now again, we have green candles, we have 40 shares, so we can take out 5 shares, 10 shares, we can put some money in the pocket, which would have been good because look what happened. Now we are below our stop loss, so we have to exit. Okay, let's go again. Now we are above. Let's go long. Stop loss here. You should calculate your stop loss. I'm just, for the exercise here, I'm just using the same fixed number of shares, but you should calculate the stop loss, so how much money you can risk. So for example, if we enter here, where we enter now, your stop loss should be here, okay? So you can calculate, you have $10, $10.71 times 40 shares, we have $400 risking here, and we are trying to make whatever we make when we go up here. Or you can do 1-to-1, 1-to-5, might be better to cover some commissions and slippage, or maybe 2. You can simulate and see what goes better for you. I try to buy here and sell on top, or after a few green candles. Let's go and see what happens. Oh, we are again underneath, so we lost again. We sell. Let's go further. I told you this is a downtrend, so we will get more losing trades here. Again, we went up. Also, when it spends too much time on the lower side, it means we are in a downtrend. So what we want to see is like this. We want to see a short period here and then move up. This is a part where it's uptrending, so it's going more up than down. Where it has longer periods down here, you can look from here to here. It just went down, 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 down. So when you have a long period here, maybe you should stay out of it. When you have a longer period and then just a short period, that's the period where we make more money. Okay, let's try again. So we are close. Now we went above, we went below, so we sell here. Even though we didn't make too much, we made some money. See here, we had a short period on top here. This means it will stay longer down here, so it might be good to short it. We will go long. We'll wait for it to come back. 21.95. Let's buy. See what happens. We cannot have only winning trades. This closed. Debatable if it's below or not. Let's say it's below. Let's look only at the indicator. Now we are above again. Let me put it like this so we can see the stop. Again, we are out. We're losing bad on AMD. We are up again. Let's buy. I missed that one. Let's say it's not below. Let's go again. Now this is below. Sell again. And now we are again up. Buy again. Let's see what happens. Now we have another close underneath. We're waiting for the price to go down, and then when it comes up we go long again. 20.78. Let's do again. So we had a really bad period. This was because the stock was trending down. So we can see that the stock was trending down. And we should avoid these periods. Look how long it stayed in this area, and only short periods in the top. So if you see this, we should try to avoid it. I showed you this example as well because, as you can see, it doesn't work all the time. So you have to simulate it as much as you can just to see how it works and how it helps you to trade it. So you can check. You should do this with every indicator. There are strategies here. Stochastic. So we have a stochastic slow strategy, and then you have a tester here. As you can see also, I don't know what the period is, but it did not make any profit. And you can see it as you go. So we bought here, we sold here. This strategy gives you also short signals. So here it shorted and it went out here. So this is a big loss. But if you do only longs, might be a little bit different. Again, depending on how the stock is trading. Look how many entries. These are not the best entries here, where we tried as well. So maybe the short ones would have worked, as you can see. So short, short, cover, cover, short, cover, short, cover. You would have made some profit. This was under the 200 SMA. So if you adapt for the trend, you have more chances to make profit. Also, if you see this type of pattern, this tells you you're in a downtrend. Again, downtrend where you have a very short time on the top, downtrend. So this means the price is spending more time on the downside. So it's in the downtrend, it's going down. You need to wait for it to go and trade a little bit above here and give you a confirmation that it's in an uptrend, like here. Look, it stayed quite long in the top part, and then it had a short bounce here. Of course, if you would have entered here, you made some money. Here as well. Here as well, as you can see. And then it moved and it started to stay more in the downside. More periods in the downside means downtrend. More periods on the upper side, it means uptrend. So this is it. You can also simulate on 1 minute. Let's see if this is... Okay, that's why it did not work. Let's stop the replay. Let's do 1 minute. Let's close this one. Let's close the strategy. Okay. Okay. And let's go to a specific date. And let's see how it works on the daily. You have to know that because this is 14 periods, it means if you have a gap like here, these first candles will be measured taking into consideration these candles as well. So it's better to wait for 14-15 candles, so the first 14-15 minutes of the day, for the indicator to adjust, so you can start trading a little bit later. So let's go and see from here. It doesn't work again. Okay, now we are working. So click start. This is 16th of February, so yesterday. Let's stop it here for a little bit. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So now we are adjusted and we can trade it. Again, we are under the 200 SMA. So from my side, I think it will spend some time around here, but let's try it. Let's give it a try. Let's say we missed this first one because we were waiting for it to have the 15 candles. And now we can move. As soon as it goes above, I will go long. This is a 1 minute chart, so we should have a bigger size. Let's do 80. Because we will not expect that much movement. So our stop loss is here underneath. We went above, we went below. So you could have sold here, not much profit, or we can wait a little bit and see if it goes up, because I missed it. Let's wait for it. It's actually going down. Let's wait to see if it's taking our stop loss out, because it made a few bottoms here. It might actually go up. No, it's not going up. We are here, the stop loss is here, so I'm waiting to see a stop underneath my stop loss. Let's see if it happens. This one, so we sell now. Okay, let's go again. Now it went up again, we buy. Let's go slowly. It's going sideways, and now it's going. It did not close under my stop loss. Let's give it a little bit, but now it might. It's actually going up. So we are on the top side. We are waiting for it to come underneath. We can also sell now, or let's wait and see for it to come underneath. There it is. Sell. We were a little bit late. We did not do much. We just made the money back. For me, I try to trade in the first 1 hour and a half to up to 2 hours from the opening of the day, because it's more volatile. But then let's see how it goes further. So we are waiting. I had a position here. Let's close this one. I don't know what happened. It went short. Okay, doesn't matter. Let's go further. So I'm waiting for it to come down. This is a good sign. If it's trending up, if it went above the 200 SMA, might give us a chance to enter. So now we went down. Let's see when it comes up here. Buy. Now it closed underneath our stop loss. I don't know why it's moving like that. Should be paused. It went up above, so I'm going back in. My stop loss is here underneath. If it closes under that line, it closed. Okay, let's go again. Wait for it to go in the blue section. Now I missed. I should have been long here, but I'm long here, which is better. But normally if you wait for it in the, now we're out. If you wait for it, you have 1 minute to see the candle play, so you have time to enter at the close. Again, we are chopping here, so it's chopping us, it's taking money from us. Let's see if it goes. No, it did not go up. Let's see, where is the stop loss? It closed underneath. Let's go out and let's go back again when it goes above. Now and now it's going up. So again, I can sell here or I can wait. This is a sell. So as you can see, we are losing some money here. We had a lot of bad trades. As I said, this indicator, especially in the 1 minute chart, it chops a lot, so it gives you false signals. It works better on the daily, and it works better more on an investment side. So basically, if you do swing trading and you are waiting, you don't have time to play with it every day, you can see that maybe AMD is not the best stock because it's going in a downtrend now, but at least for the first part when it was going up, if you bought in these areas and held the price, held the stocks, at some point it goes up, so you can make some profit. Again, play with the indicator. This replay button on TradingView is extremely helpful. The strategy tester is good, but I prefer this replay button because you can actually simulate more the live trading, and you can optimize the trade and see what goes well for you. Also, it depends a lot on what stocks you're trading. So I try to trade only stocks that are in the S&P 500 and also stocks that are in Nasdaq 100, just because these are the strong stocks, so they are not really gambling. It's not like a new stock that is $10 and it fluctuates $1 or $2 per day. So here you have stable stocks, especially if you are doing swing trading. You can wait, you can buy something and wait and see how it goes. And there are other options as well. Maybe you can add multiple positions and wait for it to go up. You can simulate and you can do different scenarios. That's it for now. Thanks for watching. Have a good day.